Hello kids, today I am going to give you a brief explanation about accounting. Now this video is specifically designed for those students who have got accounting in any of the form in their master degree course, not in their bachelor's, not in the 11th 12th standard, no, only for those who are having in their master degree course, but accounting is not their main subject. Accounting is just a supplementary subject for them which they need to know, for which they need to have the understanding. Okay, so this video is only for those students. Let me make that first part very clear to all of you. Fine. Now, in your syllabus you will have accounting, but it will be prefixed by some words. So let me just explain to you that there are three basic types of accounting: cost accounting, management accounting, and financial accounting. So basically you will have this as your subject: financial accounting or accounting for managers, something like that. All means one and the same. Now what is financial accounting? Before we go to that part, accounting in simple words, bookkeeping, maintaining records of your incomes, expenses, assets and liabilities to know what is your financial position. That is the main idea of what accounting. You know, in childhood days you might have kept one diary in which you used to record how much money you got in the form of pocket money, where all you spend it. In simple words, that is accounting. But when these income and expense increases, you people might have used Excel sheets. Correct, you are in a hostelites nowadays, so you need to know how much money is there in your hand. You take out your bank statement, right? Now you check your bank accounts, you come to know how much balance is there after doing all your GPays and all that stuff. Indirectly, these are the simple examples of accounting. But now when you talk about financial accounting, correct, now what you people will have to do is, after completion of your degree, when you work in some corporate sector, you are supposed to use financial statements, which is a part of financial accounting, for multiple various uses. Correct, now there is no definition. Okay, you will have to use financial accounting for this, financial for this, cash flow for this, income. No, depending upon the particular use, you may use this over there. Now in your course syllabus, they are going to teach you that part: how to use financial accounting, how to find ratio analysis, what is the meaning of ratio analysis, what is the meaning of cash flow, right? Now how to interpret the cash flow. All the statement is taught to you in your academics. Now what is my duty then? I'm not going to refer to that right now. What I'm going to refer to is what are financial statements, what you are going to play with. Financial statements is basically a combination of two things: income statement and balance sheet. Income statement, also known as profit and loss account. Balance sheet, as I am saying, the word itself is a self-explanatory: balance sheet. Correct? Now to prepare income statement and balance sheet, children, you need to have something, you need to have knowledge of something known as trial balance, which should be tallied. Okay, with the help of a tallied trial balance, you can prepare income statement, balance sheet. So if you want to use financial statement, you need to know what is income statement, what is balance sheet. To know what is income statement and balance sheet, you need to know what is trial balance. Okay, fine. Going further south, to understand trial balance, what is trial balance, how it is prepared, you need to know what is ledger account. What is ledger account? Okay, ledger account, a T-shaped account which gives us detail about any particular item. Okay, fine. So you need to know what is ledger to understand trial balance. You need to know trial balance to understand what is income statement and balance sheet. So you need to know ledger. How to prepare ledger? On the basis of either journal entry or special books or subsidiary books. So for knowing ledger, you need these two things. And how do we know journal entries and subsidiary books? It is based on the rough book in which you people would have recorded your transactions. It will be sounding a little bit confusing. What is happening? The happening is such a way that you are climbing a trend which is already moving. You are right now over here. Your academicians or your educators expect you that you have got somewhat knowledge of these things, on the basis of which they are going to play with financial statements. Right, on the basis of which they are going to tell you what is gross profit ratio, what is net profit ratio. But to understand what is gross profit ratio, you need to know what is gross profit, what is net profit. My job is to explain to you these things. Now, why I'm going with this way is you understand the purpose of the lectures. We are going north to south in simple language. Right now we are going to do as I call as reverse engineering. Normally in 11th grade we start from here, and we reach total here. But you are not in 11th grade, you are in the master's level. So for you, I'm going to go to the reverse, and I explained to you this concept. Correct now? Once again, we want to prepare financial statements, right? That is a combination of P&L and balance sheet, income statement and balance sheet. You need to know what is a trial balance. To know what is a trial balance, you need to know what is ledger account. To know what is the ledger account, you need to know what are journal entries and subsidiary books. To know journal entry subsidiary books, you need to know from where we record it, from a rough book in which you have recorded transactions. Clear? Right? So understood? You cannot skip any of the way. You have to go step by step by step. Then only you reach over here. In middle, if you jump from journal entries directly you want to go to ledger account or trial balance, then it will become a little bit complicated for you. I'm not saying it is not possible. It is possible, but let us not complicate things. Let us go in a simple manner and reach up till here. All right. So we have come to the word transactions. I'll highlight the first few letters, the meaning of which is transact. Transact is an English term. It's not an accounting term. It's a simple English language term. Transact. Transact means what? Give and take. You go to a bakery. You buy a packet of bread. He gives you a packet of bread and you pay him 30 rupees. It's a transaction. What's a transaction? Buying and selling. Giving and taking. Correct? That is a transaction. When you give something and you take something in return, I'll call it as a transaction. When you give and you don't get anything in return, not a transaction. Clear? You're giving and getting back in return. Now from here we'll come to the definition of accountancy. Accountancy is the process of recording, classifying, analyzing, interpreting. Interpretation, what you people are doing. Last step. Right now, analyzing, interpreting business transactions. Business transactions, transactions related to the business. See, if you want to understand accounting, the first and foremost thing that you have to understand is who are you. Don't think yourself as a student. You are a businessman. If you keep that point in your mind, then only you will be able to understand what is accountancy. Right now, a simple example of that is salary. When I use the word salary, the class or the students will be divided into two groups. One whose parents are receiving and one whose parents are paying. For the receiver, it's an income. If a father is a salaried employee, he is getting a income. For him, salary is an income. But if your father is an employer, that is a businessman, for him it is an expense. So for you, I don't want confusion. Who are you? Owner of the business. For you, salary is what? An expense. Clear? So keeping that in the mind, we come to the definition once again. Accounting is the process of recording, classifying, analyzing and interpreting business transactions related to my business. Transactions related to my business. Right? In terms of money. Monetary transactions, that are what we are going to record it. Everybody clear with this? See, in the basic level for journal entry, ledger and trial balance up till here, the questions are in the form of transactions. The questions are in the form of transactions. Here I have given a few examples of transactions. Purchase goods of rupees 1000 is a transaction, business transaction. In your business, you are buying goods of rupees 1000. Purchase goods of rupees 1000 from Mr. A. Again, another transaction. Purchase goods of 1000 from Mr. A for cash. Again, these are all what transaction, children? Business transaction. You are paying rent. You are receiving commission. Goods stolen away. You are buying a machinery. All these are what, children? Transaction. This is going to be a question. So first and foremost thing is you have to analyze the transaction. You have to understand the transactions. Now to make it understand, transactions are divided into three categories: cash, credit, special. Cash transactions, credit transactions, special. Cash transaction, in which the immediate payment of cash takes place. That is, the cash is either paid immediately or received immediately, not at a later stage. You go to your canteen, correct? You order French fries, right? The moment you order, he gives you the plate, you pay him money, matter over. That's a cash transaction. Correct na? But again, if you are a regular goer to the same canteen and you and the canteen come into some kind of trust things, and you people decide that you will buy French fries every day and you will pay him at the end of the month. So what happens? You go, you order a French fries, you eat it, but you don't pay today, you pay after a month. That is credit transactions. That is what transactions? Credit transactions. Cash, you pay immediately. Credit, you pay later. In credit transaction, what happens is, there's a small difference. That canteen owner will have a special feeling for you. Correct? Whenever you go to his shop, whenever you go to the canteen, he'll always welcome you. How are you? Everything you'll ask. Right? He has got a small feeling for you. You know why? The reason is, he needs to collect money from you. If you have already paid, he doesn't have to remember you. He has to remember you only in what transactions? Credit transactions. And you also, the same way, you'll also have to remember this part, that today I have taken a plate of French fries, 50 rupees, I have to pay to the canteen owner. Tomorrow again I'm eating, now I have to pay 100 rupees. Tomorrow again I'm eating, I have to pay 150 rupees. Correct? Now, you also have to remember the name of the person as well as how much amount you have to pay to him. That is the specialty about what transaction? Credit transaction. Let us understand with some examples. Again, purchase goods of rupees 1000. They have not mentioned the name of the person. So I'll understand this as what transaction? Cash transaction. But second one, purchase goods of 1000 from Mr. A. The question clearly specifies the name of a person from whom you have purchased. Why is that mentioned? Why is the name of the person given? Because you have not paid him yet. If you would have paid, इसका कोई काम नहीं है, तो फिर नाम का कोई काम नहीं है. नाम का कब काम आएगा बेटा? When it is a credit transaction. Let me